Good morning and welcome. My name is Lori Goodman, and I'm the co-director of the Housing Finance Policy Center at the Urban Institute. We're very pleased to have you all with us today. On behalf of the Urban Institute, I do want to recognize that this is a national day of mourning, commemorating the impact and legacy of George H.W. Bush as our nation's 41st president. Regardless of where you are on the political spectrum, we can all agree that George Bush always displayed integrity, a sense of patriotic duty, and a real mission to work across both sides of the political aisle. We have all come to appreciate how very important those qualities were. He left his mark on the world by leading with his own brand of diplomacy during the reunification of Germany and the breakup of the Soviet Union, two of the most important moments in 20th century foreign policy. On the domestic front, his accomplishments include the cleanup of the S&L crisis he inherited, as well as the passage of the Americans with Disabilities Act, which is a critical piece of civil rights legislation. We join the nation in remembering and reflecting on the legacy of a great leader. That said, we've been working closely for several weeks with the Hispanic Wealth Project and the National Association of Hispanic Real Estate Professionals in organizing today's program. And we thought about postponing it, but ultimately decided this is a timely and important topic, and we decided jointly to move forward. We have a strong lineup of 3 panels with great speakers on each one. I want to thank all of our speakers for being here today, and I want to thank all of you for being here today. I want to encourage everyone in our audience here and virtually to continue our dialogue by sharing your thoughts or observations on social media using the hashtag #LiveAtUrban. Please include the speakers' Twitter handles, which are displayed on today's agenda. And here's today's agenda, so you should have all picked up a copy of this on the way in. For our virtual audience watching over the webcast, we thank you for joining us today as well. If you're tuning in on the webcast, you can submit your questions to events@urban.org anytime during the program, and our staff will filter those questions to the moderators. We know that the webcast audience is larger than usual, and we encourage you to fully participate by submitting questions. If there are any reporters in the room, we're really glad you're here, but we ask that you check quotes with the speakers. We want to promote an atmosphere where our speakers don't have to worry that they'll be quoted out of context. I want to thank our panelists for joining us and extend a special thanks to the Hispanic Wealth Project for supporting our event this morning in collaboration with the National Association of Hispanic Real Estate Professionals. It's my pleasure to introduce Gary Acosta, the co-founder and CEO of the National Association of Hispanic Real Estate Professionals, who's going to kick off our program this morning. Thank you very much.
Thank you, Lori. Good morning, everybody. Good morning. Those of us from the West Coast, it's like still the middle of the night, so thank you all for being here. Let me just start off by echoing Lori's comments about President Bush, as today is the official day of acknowledging and reflecting on his life. I guess I'm proud to say that the Reagan-Bush ticket was the first presidential ticket that I voted for as a young man. And I didn't know much about policy. I didn't know much about, actually what a president did at that time. But I knew what President Reagan and ultimately President Bush made me feel like. It made me feel proud to be an American, essentially. And I think this week, as we reflect on his life, I think it would be great if we go back and really think about the way we used to interact with one another in terms of our political dialogue and in terms of what it meant to be an American in this country. So I just wanted to start off with that. Also, I want to thank our host from the Urban Institute, Lori Goodman. Thank you for working together and organizing this event. We did have some doubts of whether or not it would come together given this very special week, but I can see from the audience that it did. We made that decision. It was the right decision. Of course, it was driven more by the fact that we couldn't get any refunds on the travel and the booking, but nonetheless, it turned out to be the right choice. I also want to thank our NAREP family that's here today, our leadership that's here, Daisy Lopez-Sid, the national president of NAREP, David Acosta, the president-elect, and Jerry Asensio, who is the chairman of our Wealth Project initiative. So let's give them a big round of applause. Thank you. And of course, the NAREP family that came in from all over the country to be here and to be part of this event. Thank you for being here. Our speakers, thank you for taking time out of your day to come and be a part of this event. Very important to us, and we're looking forward to your comments and to all the attendees that are here this morning. So, let me just give everybody a little bit of context about the Hispanic Wealth Project before we get started. The Hispanic Wealth Project started off with a conversation that I had with Henry Cisneros. Is Henry on the Urban Institute board? I believe he is. Yeah, so even more apropos. Henry has been a great mentor to me and to the National Association of Hispanic Real Estate Professionals since the very beginning that the organization, when we started back in 2000. And he and I had a conversation around 2012, subsequent to a report that was released by Pew, where they did some analysis and determined that Hispanic wealth had been disproportionately affected by the Great Recession. And as much as 2/3 of Hispanic wealth had eroded during that period of time, a devastating and astounding data point. And so we were talking about that conversation, and Henry, who's involved in a lot of different things, I was looking for his advice and counsel and really what he thought about all of that. And in the course of that conversation, determined that NARP was in a unique position to provide leadership around that particular issue for two reasons, probably others, but two in particular. Number one is household equity or home equity still remains the largest source of wealth for most families in this country, especially Hispanic families. And we're an organization that's all about advocating for sustainable Hispanic home ownership. But a secondary source of wealth for Latinos in this country is small businesses. And we're an organization that is focused on advancing sustainable home ownership, but whose members are primarily small business professionals. And because of that, we thought that there needs to be some leadership that came from this organization on this topic. And it inspired us to create an actual goal and a report that we deemed as the Hispanic Wealth Project Blueprint. And the goal was to see if we can help triple Hispanic wealth in a 10-year span. Obviously, we're one organization, and there's only so much that we can do. So we wanted to make sure that what we did do had the best chance to have an impact in the marketplace. So there's a lot of ways you can tackle the issue of wealth and Hispanic wealth. And we don't want to necessarily say that our way is better than anybody else's, but it is a way that we have the opportunity to have influence. We have a tremendous platform out there across the United States. Over 30,000 individual members and close to 100 local chapters. And those real estate practitioners are not just facilitators of real estate transactions, they are influencers in their community. And we can utilize that network to disseminate information around best practices as it relates to household wealth. And we wanted to take full advantage of that. So the Hispanic Wealth Project has three prongs associated with it. Number one, we set a goal to get and to help guide the Hispanic homeownership rate to exceed 50% for the very first time within that 10-year span. And not an easy sort of goal to accomplish because Hispanics are a very fast-growing segment of our population. So you're growing the denominator at a very fast pace, and so to also increase the homeownership rate is doubly challenging, but a goal that we thought was attainable. Secondly, we wanted to focus on the things that really mattered in terms of advancing small business activities in this country. Many of you may know that Hispanics are one of the greatest sources of small business creation in this country. We create businesses at twice the rate as the general population. And so what we recognize, though, in looking deeper in terms of the Hispanic small businesses is that the large majority of them are micro businesses. So there's an opportunity not only to help facilitate more Hispanic businesses, but to help the ones that exist become even larger and more successful, and that's our focus. And thirdly, savings and investment. One of the things that we recognized in our study is that Hispanics, regardless of income band, tend to participate in what we call non-cash financial assets at a lower rate than the general population. And what I mean by that, I mean the stock market, bonds, retirement accounts, and so forth. One of the reasons why we were disproportionately affected by the Great Recession is that we were not diversified well enough. So those are the three prongs that are our focus of the Hispanic Wealth Project, and we're going to touch on all of those during the course of the next 3 hours. So once again, thank you all for being here. Thank you to the Urban Institute for hosting us, and we look forward to a great morning. Thank you.
Well, thank you very much, and welcome to our first panel on achieving sustainable Hispanic homeownership. I'm going to introduce my very distinguished panelists. Danny Gardner, who's the Vice President for Affordable Lending and Access to Credit at Freddie Mac. Marissa Calderon, who's the Executive Director of the National Association of Hispanic Real Estate Professionals. Raku Kakamanu, the Senior Vice President of Housing Policy and Capital Markets at Wells Fargo, and John Lawless, the Vice President of Product Development and Affordable Housing at Fannie Mae. I'm not going to read their bios, but they're all in your handouts, and I do encourage you to read the bios. It's a very, very strong lineup of panelists. This panel is going to run 40 minutes, and then an additional 10 minutes at the end for question and answers. It's going to be divided into 3 parts. First, we're going to very quickly set the stage on Hispanic homeownership. Then we're going to talk about the lack of affordable supply, and then finally finish up with credit availability issues. Again, if there are any reporters in the room, please check your quotes with the panelists. With that, let me actually start on setting the stage for Hispanic homeownership. Marissa, can you give us a quick update on the state of Hispanic homeownership, including recent trends, and talk about the largest impediments?
Thank you, Lori. So last year in 2017, which is the most recent set of data we have for a full year, Hispanics rounded out the year at 46.2% in terms of the rate of Hispanic homeownership, which is actually the 3rd consecutive year that Hispanics have increased the rate of homeownership, and that's more so than any other group, and the only group to have completed that three-peat, if you will, for the basketball fans out there. We have done a nice job of starting the year out strong. So in the first quarter, 48.4 was the rate of Hispanic homeownership just for that quarter alone, and then have done a nice job of consecutive quarter improvements as well. And that's actually the strongest start for Hispanics since 2010. So I would say that we're, while quarter by quarter information is not standalone success, it's certainly something to watch, and we're positive with respect to how 2018 will look. It's not all peaches and cream, though, so there are things that are potential or actual impediments for increases for Hispanic homeownership to either maintain the same rate of improvement or to increase that further. And I know we'll talk more about those here. One of them is access to credit, in particular low down payment mortgage product. That is in particular very important for Hispanics and other first-time buyers as well. And immigration reform, which many folks think is potentially unique to Hispanics, but not. It's really an American problem, and something that is we should solve for the country. And lastly, and I would say probably most immediately important, is the issues associated with supply. So lack of inventory is certainly a primary concern and barrier, because if there's not product to purchase, then you obviously can't become a homeowner.
Well, thank you very much. So with that, let's actually turn to the lack of affordable supply. And John, why don't you set the stage for this part of the discussion by giving us a quick update on how severe the supply shortage is and what you think some of the potential solutions are.
Sure. Thanks, Lori. Thanks, everyone, for having me here today. Sort of a day of reflection, and I'm going to go through a series of stats that are another reason to mourn, in my opinion. It's an issue that's really, really serious. And I'll try to give at least some of the contours of what's driving the issue, because I think that helps think about what the appropriate solutions need to be. So, bottom line, we don't have enough homes in this country, not enough doors for the people that we have. And that's not just a home ownership thing, it's a rental thing as well. So what's driving it? Well, the cost to building homes has gone up substantially. Cost of labor, we have a severe shortage in the labor force. Immigration issues are making it worse. Cost of lumber has gone up, so they usually use these L's. So lumber, like the material goods, have gone up. Regulatory burdens, especially in the building codes, have made it much more expensive to build in a lot of areas. The home builders say it costs $84,000 in pure regulatory cost to build a home right now, which is insane. And then lastly, the cost of financing has gone up for builders as well. So those are the sort of costs of the inputs. exacerbating is the fact that we have very limited land where people are creating jobs. And so even if you were to get rid of all the cost issues, you still have the problem where you're actually going to build. And the fact is regulation again comes into this place in the form of NIMBYism. I don't want anybody to build that multi-unit house in my backyard. I will say, I've spent a lot of time thinking about this issue, and the thing that's most disheartening to me when I think about these issues of NIMBYism and the fact that we have 9,000 different bodies in this country that determine what can get built across this country, right? Just think of the complexity there. But the biggest challenge in my mind is those rules were often put in there for a good reason. It might be environmental protection. It might just be they're trying to balance their budget and have enough infrastructure for schools. And so it's not as easy as you've got a bunch of dumb rules, just change them. It's actually way more complex than that. So these things layered on top of each other over the last few years have ended up with a deficit of about 5 million homes. Estimates vary, but that's probably a good number to think about. And every year we're adding to that deficit, and the rate at which building is growing is just not catching up with population growth. And so unless something drastically changes, this housing supply issue is just going to get worse and worse. And we're going to see outcomes like more people living at home with their parents, more people taking on roommates. A very common thing if you live in the DC area is you drive until you find a place you can qualify for. Your quality of life is 2 hours spent in the car. And so it's like I said, it's a very sad, hard issue to tackle. And as Marissa said, this is right at the core of affordable housing, and we have to take it head on.
Well, thank you very much. So, Danny, what specific actions is Freddie Mac taking to try to address the affordable housing issues?
Yeah, sure. So, all the factors that John laid out there, lead to not only the deficit in housing, but also the type of housing that tends to be created because of those challenges tends to be more expensive housing, right? So the homes that are being brought to the market today are the homes where the developers can actually, achieve their margin given all of the headwinds that John had laid out there. So, we think about that, and we're actually this year kind of focused on it both from an urban-centric solution as well as solutions beyond urban centers. So with the opportunity of the mobile workforce that we have today, the ability to work remotely, many of you probably have friends or family, who can do their job from essentially anywhere. There is an opportunity actually to provide affordable housing without having to migrate into the urban centers. So from an urban perspective, one of the things that we've recently done is to announce a new product to help provide greater liquidity into community land trusts. And if you're familiar with that type of structure, essentially you would have a unit of local government or a non-for-profit who would actually hold the land underneath the homes and sell the houses to lower income families with some type of restriction. So upon resale, they cannot sell for the full value of the property, and that affordability can be retained for a replacement family. And historically, we have not seen these models scale because there really has been a severe lack of liquidity into the secondary markets. There's a lot of nuances with each individual program that make it difficult for investors to understand and also to take possession of the property should you have to perfect the lien. So what we did is we worked very closely with Common Ground Solutions, a national organization that coordinates on behalf of Land Trust, and we have designed a new product where more lenders will now be willing to lend against these programs because historically, in the absence of a broad secondary market solution, they had to hold these loans on their portfolio. And then secondly, actually, we are about to announce a new type of housing stock that we are supporting called the Choice Manufactured Home. And what that actually means is that if you think about manufactured housing, it often is associated with rural. It's often associated with manufactured housing communities, also known as trailer parks. And the housing type tends to be very different than existing home stock, especially in urban areas. We believe this actually could be a great potential housing type for urban infill because it has the look and feel of other surrounding homes that are site-built, but you get to achieve the efficiencies of constructing these homes in a factory. Given the labor shortages and the material shortages, you can integrate robotics. You have other means of creating this home more affordably. They're also wonderfully energy efficient, but from a look and feel perspective, they look just like the homes in the surrounding community. They have pitched roofs, they have attached garages, attached porches, granite countertops, drywall, in the interior of the home. So those are two solutions that Freddie Mac are currently working on and supporting.
Thank you very much. John, what about Fannie Mae?
Yeah, so Danny mentioned two important initiatives, part of the duty to serve regulatory requirements for both GSEs, so completely agree on the manufactured housing side. I'd say, one of the things that we're thinking a lot about, and, given that we're talking about wealth building is, the challenge with something like community lending, with community land trust or manufactured housing, is we're not quite sure where the appreciation is going to go there. And so the one thing that we want to make sure of as we think about solutions is let's put people in a place where they can really build wealth through housing. And so one example that we're focused on, and I highly encourage people to look at this product much more closely, is we have a renovation product out there. And so one of the things that's fascinated me as I kind of drive through a lot of cities is that there are often these neighborhoods that have just sort of been left behind. The school districts are getting bad, but it actually has a housing stock there that's got good bones, if you will, right? And so what we're trying to do is make it really easy for a buyer to come in and renovate that house as part of the purchase process so that they can make it more livable. And we think that that's going to start turning around neighborhoods and actually unlocking supply. And one other thing I'll mention with the renovation product is you don't just have to sort of go in and sort of beautify the house. One thing that you could do is take the house and build multiple units in the house or build an accessory dwelling unit in the house, right? So given the sort of move to multi-generational housing, this facilitates the ability to take a house that you might not have thought was the right house and turn it into exactly the perfect house that you wanted. And over time, that's going to really increase in value as those neighborhoods start turning around. So renovation, in addition to manufactured housing, modular, I'd say the only other thing, and I always like talking about this on panels because it just sounds so far-fetched, is 3D printed homes. There are actually companies that are building printers that make homes, and it sounds crazy, but I literally was standing in a home that was built in 24 hours with a machine printing concrete. There's another company that's doing it with polymers. And so, as I mentioned, we're going to have to see a radical change that's going to really make housing supply get fixed over time. And I think these are some of the more far out technologies that we're going to have to learn how to adopt. And when we do, I think it's going to be really powerful.
Thank you. Raghu, would you like to add anything on, or Marissa?
No, I think that I'm actually reflecting on a conversation I had this morning, which I mentioned to some of my co-speakers. I took an Uber here this morning, and I had a driver named Issa. And Issa was talking to me about his difficulty in buying a home in the DC area. And he said, is there a policy out there that would help me buy a home in DC or make it more affordable for me? He asked me that question in a taxi, and I answered it truthfully, and said no. There is not a policy for that nationally. I think there's an understanding that there's a crisis there for affordable housing, and Jonathan and Danny talked about that. There's a crisis right now in affordable housing. I know when we talk about this issue within Wells Fargo, this is one of our very top policy priorities. I don't mean top housing policy priorities. We see this as an imperative, for us to be a strong contributor to the nation on. I have an opportunity to work with a lot of other lenders, banks, non-banks, large lenders, small lenders, and I can tell you that the industry at large sees this as a critical priority. And there's a lot of good work that's happening, I think, across the industry. But I come back to what Issa said to me, right? Is there a policy, right, to help me buy a home? And that's where I think the gap is right now, is I think there's a lot of good work happening at a product level like Jonathan and Danny talked about and Marissa talked about. There's a lot of good work happening at a local level, but is there a national policy, right, to help people buy homes? And that's where the gap is right now. I think there's been, we have been working on a lot of issues from the financial crisis of 10 or 12 years ago, and those issues have had a long tail to them. Right? And we've been focused on those issues for, I think, a long time, but sometimes situations manage us. And this is a situation, I think, that is now managing us. And, I think, as a housing policy community, we can really kind of switch gears here and I think bring a lot of focus to this as well.
I want to talk about the intersection between the inventory shortage and workforce, because whether it's 3D built homes or Lego bricks, which is some of the innovation that's happening, there's sort of Lego brick type or stick built homes, you need a workforce to be able to construct that product. And right now, the home builders estimate that there are about 300,000 jobs within this industry that are unfilled, and that's a primary cause of the shortage because there aren't bodies to actually build those homes. And if you think about the workforce, at least the two populations that I'm interested in as a Venn diagram, about 30% of the construction workforce is Hispanic. Another different 30% of that construction workforce are undocumented. And that Venn diagram overlap is squarely within our space. And so for us as an industry, we really do need to spend time and space talking about immigration and the impact on that workforce shortage, because there are ready, willing, and able individuals who want to contribute, who are contributing to the country, and immigration and some reasonable sense of solving for the problems that we have now will help to at least settle some portion of that workforce shortage.
Well, thank you very much. With that, let's move to the credit availability part of this discussion. And actually, Raghu, can you set the stage for this part of the discussion by giving us your thoughts on the issues inhibiting credit availability, what's been done, what more can be done? How do you see Wells's role in this?
Yes, yeah, certainly. I think that there's a lot of ways to think about credit availability. There's a lot of research that's been done by the Urban Institute and NAREP and many others on credit availability. And sort of a lot of very statistical and data-driven ways to look at it. I think another way to sort of frame the issue is to think very simply about two questions, which is there financing to provide credit? And do we know the consumers to whom financing should be provided to? These are the two questions sort of I think we think about a lot within Wells Fargo in terms of how do we provide credit out in the market as well. When you think about those two questions, at a macro level across the entire market, we think about is there financing in the market right now? And I think the answer to that question is yes and no, right? So we have excellent work that's been done, I think, in the conventional lending market. Danny and Jonathan have talked about that. But we have a program, an FHA program today, who is probably not contributing as much as they can to credit availability across the country. 36% of FHA borrowers have a FICO score of 680 or above. So to some extent, they're competing with the conventional lending market today. So across the nation, when you think about financing, there's an FHA program as well that I think that we can continue to work on and continue to improve. I think that when you think about do we know the consumers who need that credit as well, there's a couple things there as well. I think we're looking at regulations like Appendix Q and ATR-QM across the board, and we're looking at things like alternative credit scores as well. So I think at a macro level, there are issues that affect all Americans, right? There's issues about is there enough financing in the market, and there's issues about do we understand the types of borrowers and their needs across the market as well. Now, it also helps to look very specifically, those two questions, at specific customer segments as well. And when we look specifically at the Hispanic segment, I think it's very important to look at that with a commitment too. At Wells Fargo, we've been doing that. We've been looking together with NAREP at our own responsibilities in this community. Our CEO, Tim Sloan, spoke recently a couple months ago, and he said, we have a commitment to the Hispanic community with homeownership, and our goal is to create more Hispanic homeowners than have ever been created in this country. That's an organizational imperative, I think, for Wells Fargo in the market. When we think about, and so when we think about that at a very specific level at Wells Fargo, we think about financing, and we think about do we know the consumers who need financing. In terms of financing, we've worked with NAREP to make a financial commitment into homeownership in the Hispanic community. In 2016, we announced a $125 billion commitment over 10 years to grow Hispanic homeownership. And that has proven to be very successful, I think, in the market as well. In 2017 alone, that contributed to 87,000 new Hispanic homeowners. We were able to deploy over $20 billion of that money in 2017, and it continues to be a very successful financial commitment for us. I think that, but when you sort of talk on behalf of Wells Fargo or a financial institution, you expect a financial commitment, right? But I think we've also taken the opportunity in this partnership with NAREP to really understand the consumers better as well, to understand ourselves better, and how do we do business. So that's been, I think, an important opportunity for reflection for Wells Fargo as well. And we've been able to, I think, grow and serve this community a lot better through that understanding as well. A couple things we've done here. One is we've thought a lot about who we are at Wells Fargo, right? What's the makeup of our company? Who are the people that work at Wells Fargo? There's a statistic that NAREP publishes that 4% of loan officers across the country are Hispanic. I've been at Wells Fargo for 16 years, and I've seen a transformation there. And one example of that is, versus the 4% national average, Wells has 12.7% Hispanic loan officers. It's a tremendous sort of thing for us, and able to sort of meet the Hispanic commitment as well. 45,000 of our team members are Hispanic, right? That's a powerful opportunity for us to really understand who we are and understand this community as well. So that's been an absolutely critical sort of step for us as well. We also see homeowner counseling as a very important step here too. As part of that financial commitment that I mentioned before, we have committed to spending $10 million over 10 years on homeownership counseling, and we may do more than that actually as well. To date, we've already deployed half of that money in homeownership counseling to the Hispanic community, educating people, educating new homeowners, educating them about the process, and we've seen that pay a lot of dividends as well. I think that's been a direct contributor to the 87,000 number and some of the other things that we've talked about as well. Now, having said that, I think all of us would sort of admit here that there's a lot more that we can do too. A lot more that we can do. There's more that we can do financially, of course, but there's probably a lot more we can do in terms of really understanding these consumers and making the process and making the home buying process really match these homeowners as well. I think a good example of that, I'll just bring up one, but I think a good example of that is language preference, right? And the mortgage process and sort of the language that's provided in. That's an area where I think that we can all do a better job at. We all sort of understand that there's changing demographics in this country. We talked about the fact that we're in the middle of a crisis before. Jonathan talked about a crisis. We're in the middle of a boom as well, because between 2014 and 2024, there's going to be 4 million new households, and 75% of those are from diverse communities, a large percentage of which are Hispanic, right? So that's a boom as well. And an issue like language preference is critical for us, I think, to get right? To be able to really, to try to meet that boom. Now there's challenges there with language preference. There's challenges in terms of how that can be provided, how that can be operationalized, and other things that are probably beyond the purvey here. But I can tell you that—
We'll discuss those later.
Yeah, but I can tell you that every player in the industry supports language preference. And I can say that because every player in the industry at some point of the process, at some point of talking to a customer, it's somebody who works in an organization, uses a different language than English. So somehow they see a value in a language other than English at some point of the process. Now I think we all have to work together to understand where is that value of most importance to consumers, and how do we do it in such a way that is practical as well for the industry.
Thanks. That was a great start to this. Danny, I know Freddie views community outreach as a critical ingredient in expanding access to credit. Can you describe some of your efforts in this area?
Yeah, sure. So, just hanging on some of the things that we've heard from the various speakers today, there's no doubt, one, that the Hispanic population in particular is, the fastest growing segment of the market. And so, as Raghu suggested, it's extremely important not only that lenders recognize this as the true opportunity for sustainable business growth, but also that the ability to engage with these communities may mean thinking about the diversification of your workforce and being able to set forth trusted advisors with whom consumers want to engage. And I think about even that component as being part of outreach. So when we think about outreach, really at Freddie Mac, we're focused on the consumer segment outreach, but we're also focused on the industry and even the liaisons to the consumer. So, as a participant in the secondary mortgage market, we do not directly engage with consumers. So we feel that it is our job to try and bring together resources so that those who do engage with the community have the information and ability to do so. So we spend a fair amount of time actually with teams across the country engaging in influencers in the local market. And so just a few examples of that. One, I'd like to really point out our relationship with NAREP, and not only at the national level in supporting this organization and the important research that they do, but really numerous events in local markets, engaging with local real estate professionals, introducing them to mortgage lending partners, introducing them to non-for-profit organizations who are providing homeownership support and forms of down payment assistance, and coordinating that in the local market. We kind of call that the affordable lending ecosystem, and we see it as our role to nurture that environment and ensure that all parties are on the same page and can align. We've also set out over the last couple of years on a path of trying to engage community leaders through activities we call Home Team Advantage. And really what this is about is, getting out of the echo chamber of the industry professionals and the influencers of consumers to purchase homes, but really having local government, nonprofit, and other stakeholders, major employers, come to the table and have a day-long dialogue about the importance of home ownership, its contribution to wealth development, all of the tools and resources that are available in the local market and how to harness that. And frankly, we're hopeful that when we leave, that conversation will continue and new partnerships will be sparked in order to promote home ownership. And then lastly, as it pertains to consumers, I'm very proud of a solution Freddie Mac had developed quite some time ago that we call Credit Smart. And Credit Smart is essentially a financial literacy curriculum. We designed it long ago with partners like NAREP and other diverse real estate trade organizations. We worked with universities, even universities such as historically black colleges and universities. We worked with major training organizations and other social service organizations. And we've been able to deploy that in so many different ways that we truly believe, back to Raghu's point, knowing the consumer, but also helping the consumer be prepared for homeownership in a way that we believe that they can be much more successful and sustainable. So when people think about access to credit, you yourself pointed out like a FICO average, for FHA. While it is important to meet borrowers where they are, if we believe they can be successful where they are, it's also important to cultivate borrowers to be successful and actually even have opportunities to take better advantage of the home buying process and to save money. So if you can understand the importance of having an improved credit score or a lower debt to income ratio, or even understanding the nuances of selections such as even how to price out your homeowner's insurance policy, right? All of those benefits add up over time as you become a homeowner. So we promote this program broadly. It is available both in English and Spanish, and in fact we've had some really interesting opportunities with NAREP members and otherwise as of late to promote these opportunities through Spanish language channels such as Univision Television in the Northeast, and I believe there's a broker in South Florida who actually is using our curriculum and designing a program that he intends to use on air with a local Spanish-speaking television station. But we actually took this curriculum and we engaged with an organization like Easter Seals who serves the disabled, and they took the curriculum and conformed it for the hearing impaired, for the vision impaired. So there's just so many wonderful ways that we believe a tool like that can really perpetuate the outreach that is necessary to grow sustainable homeowners. And then we absolutely want to work with partners such as NAREP to channel that capability to support the specific constituencies that those organizations provide services to.
Oh, thank you. So actually, I'm going to actually sort of reorient this slightly, and what I'd like to do is first address issues that are sort of more specific to the Hispanic community, and then we'll turn to broad credit availability issues. So in terms of issues that are more specific to the Hispanic community, the limited English proficiency, multi-generational households, and attracting a more diverse labor force. So actually, Marissa, why don't you make a few comments, and then John, and then Danny, and then Riku.
Sure, thank you. So if we look at the last 5 years of net homeownership growth in this country, Hispanics are responsible for 59% of that. So just pause for a minute. We're talking about less than 20% of the population of our country driving primarily the growth within the homeownership segment. So it's important to think about it in that context, because what's good for Hispanic homeownership growth is good for the country. It's good for America. It's not about doing things that are nice for niche segments or about engaging in diversity initiatives for the sake of checking a box. It's really about growing our country's economy and doing so in a way that meets the needs of the segment that's really causing that primary growth. Having said that, when we look at representation within financial services, to kind of put a fine point on it, it's certainly more helpful to have people within an industry that are reflective of the borrowers, because those borrowers will affinitize with those individuals more readily. So that's important. I don't want to say that that's not important, but that's not the most important reason that the industry needs to be more reflective of the borrowers. All of the challenges that we're talking about from a barrier perspective with respect to truly understanding the need for low down payment mortgage product, to understanding language needs and preferences, and the difference between serving a borrower segment that actually has a language need because of limited English proficiency versus just the cultural nuance and cultural affinity needs. Those things are more readily solved when your workforce is representative of those borrowers, because they themselves experience all those things. I mean, I think about it in these terms. I've been Hispanic all my life. So there are things that are just innate, intuitive to me, because that is my personal experience, that's my lens. And if there were a lot more people like me within financial services, then there is a common shared experience that can inform the process that we have within the industry, that can shape policy in a way that's reflective of the growth and remove those impediments. And the degree to which we don't solve for that stifles that growth for the economy.
That was great. So I want to sort of tell a little bit of a story about something that we launched, and actually your comments, Marissa, just have me think about it a little bit more. So when Fannie Mae launched its Home Ready product back in the end of 2015, right, we took affordable products at the time and we looked at them, they just weren't working. We realized the whole nature of home buying is changing, the face of America is changing, we need to reflect that. So one of the features we added to that low down payment product was something that addressed multi-generational households. And our thought was, when we did research, we saw that the growth in multi-generational households was staggering, and specifically in the Hispanic community, it was very, very common. So what we did was we said, we want to create a way to reflect the other income that's being earned in the household in the mortgage application process, right? I thought this was a brilliant idea, but of course, test and learn. We launched it, and it was very, very, very infrequently used. Now, it might have been that it attracted people to the table and they realized they didn't have to document it and we didn't see it, but at the end of the day, we didn't see a lot of it. So we went out and we started interviewing people that went to us and asked them why they weren't representing that income. And it turned out the answer we got was, from the person who was buying the home's perspective, it was a matter of pride. This is my house. I don't need somebody else on my mortgage, right? And for the person that was in the house, is like, wait, is it my house now or is it not my house, right? So we learned a lot from that, and I think this idea of a diverse workforce is the type of workforce that can approach a person that's living that situation and understand it and actually make them feel comfortable with that process. So I think we've learned a lot from doing that. I think we need to go back and think about this because, as you know, my view is that if we want to take a huge moonshot and really radically change Hispanic home owning, we have to deal with the supply chain. It's just that you got to start there. But I think if you're not doing that, you've got to deal with the limited stock of supply, and that means more people are going to co-own. And so there are interesting companies out there, like a company called Co-Buy, which is allowing multiple people to go in and buy a home together, right? So this is not, you could renovate it, right? But this is another product to allow people to jointly go into home ownership. So I think this sort of multi-generational, same generational households is a really, really important thing for us to focus on as an industry. So.
Next. So two trends also referenced in today's speakers I'd like to just speak a little bit about, and some solutions as we've thought about it also. So when Gary was presenting opening comments, talked about the importance of Hispanics in the cultivation of small businesses. What that translates to in the mortgage lending space, the access to credit space, is a self-employed borrower. And anybody who's in lending or in real estate or who's ever tried to get a mortgage loan as a self-employed borrower understands that's extremely complex, and depending upon which door you walk in and frankly which underwriter the file hits, you'll get a different answer, and that answer could be a yes or no based upon that lack of a efficient standardization. It's also true then for lenders who are trying to trade on transactions per month, per week, however. the complication of contending with some of these issues, especially as they become more complicated, can be daunting or maybe not a top priority. So this year, actually, we announced a partnership with a financial technology company called LoanBeam. And LoanBeam is actually integrated into Freddie Mac's automated underwriting system. So now we've taken something that historically has been manual and we've automated it. And we've made it simple for lenders and buyers to understand because they can simply provide their tax returns, and the technology will make an assessment of the borrower's income without the traditional paper chase. I myself have been in the mortgage business for a while, and by the time you're going back to your accountant half a dozen times trying to evidence your capacity or your income, you may well just want to give up, right? So we believe that will be tremendously helpful to the emerging trend of the Hispanic homeowner as they emerge and continue to propel the growth of homeownership in the country. Then secondly, actually, very recently, just a few weeks ago, we announced some new product changes to our affordable lending product, which we called Home Possible. But we changed the way that we account for sweat equity. So what does sweat equity actually mean? Jonathan mentioned earlier, acquiring homes and having the ability to renovate those homes. And so we recognize that in many cases, one, we have a lot of housing stock in the country that people may well want to live in, but the whole exercise of buying an older home and actually fixing it up. I think about the fact, my father was a plumber, and I grew up in one of those houses where, it was like Sanford and Sons. There were things in the yard and in the house, like nothing ever got thrown away because essentially it was a part for something else. To today, my own children, like not even wanting to help with an IKEA furniture or something, it has changed, but there certainly are a fair number of people out there, and frankly, we've talked about the participation of Hispanics in the construction force, and with the dual opportunity for them to be construction knowledgeable and homeownership eligible, a new product term such as giving credit for sweat equity, which actually can be used in lieu of cash down payment. So the idea being, you buy a home, you intend to renovate it, an assessment is made of what will it take to renovate that home, what will you yourself have to pay for in terms of materials and labor, and then you can actually use that in lieu of cash for your down payment. So that we believe, I mentioned earlier, both urban and rural opportunities. We believe this can help with certain urban neighborhoods where we still see dilapidated and depressed housing stock, but also in rural markets where there also is age housing inventory. But certainly, given people that live in those areas being more involved in agricultural type of occupations, they're more handy, and now we'll have the ability to create homeownership. So hopefully that addresses those two also trends that are emerging with Hispanics.
Cool.
Yeah.
That's great. Very good.
Yeah, just very quickly, I think it's actually important to reflect on something Marissa just said. I think, Marissa, you said 59% of new home ownership growth is coming from the Hispanic community.
Over the last 5 years, that's right.
That's a striking number, right? That's a boom. And I think, the question, and that's something certainly at Wells Fargo we recognize, it's become a priority for us organizationally as well, because it's not just important for the country, it's good business for us as well. And I'd say very quickly, again, Wells Fargo is always going to sort of be there, sort of financially at the table, and we've got a long-term commitment to this community that we look forward to over the next 7 to 8 years here and beyond that. But really, I think the opportunities are again coming back to it in terms of, do we know these consumers? Do we know these people? And as Marissa said, sort of, have we brought sort of that culture, right, and that understanding into the process as well? Danny talked a little bit about self-employed borrowers. I think there's a tremendous opportunity to understand the life situations of certain types of people, to understand sort of non-traditional ways that they bring in income. Alternative credit scores is also sort of very interesting sort of space there as well. And I'll come back to an issue that I brought up before as well, which is language access and language efficient, what we call LEP sort of in the industry. Thinking in a very logical and constructive way about how to bring language, and not just language, but sort of bring that cultural sort of understanding into the process is something I think we all need to work together on. And I know at Wells, we see challenges with this issue, but we see a lot of opportunity. And we really want to listen and understand how we can be effective at this as well.
Well, thank you. This actually...
I love the things that Wells is doing, but I wish somebody would translate mortgage documents for me, because oftentimes I don't understand them. And one of the interesting things is as we interview people where English is a second language, it's oftentimes just the process is so confusing too, right? And so we as an industry have a lot of work to do to make it more accessible for everybody, and also really think through the language issues. So I'm glad you guys are doing so much of that.
Yeah, that's a very good point.
Real quickly, one thing that we've done to help with that is we developed a Spanish-English glossary. So over time, there have been many in the industry that translate the legalese on a mortgage document to the Spanish equivalent into the Spanish equivalent legalese that people don't speak at their kitchen table. And so while we certainly include that, the thing that's really distinctive about the Spanish-English glossary that is a resource within the industry is that there's colloquialisms that are in there. So people speak a certain way around their kitchen table, and we include that because that's how they speak, and then you as a professional community can use that as a resource to help them to better understand the process.
Yeah, it's not just translation.
It really isn't. I mean, it's kind of meeting them where they are, to use something you said earlier.
Yeah. And Laura, I'm not sure if we have time for a quick plug before we move to Q&A, but
Do we have time?
real quick. No, okay, fine.
You can do
Just recently, Fannie Mae, Freddie Mac, in partnership with the Federal Housing Finance Agency, recently announced a mortgage translations website. So that is now in the market. You can find it at fhfa.gov/mortgage translations. And the glossary that Marissa was speaking of was actually a foundation of the glossary that was put out there.
Yeah.
So with that, let's move to Q&A. And I can always count on you for the first question. The mic is coming around. Not that you need it.
Alejandro Becerra, NARP. First of all, thank you for an excellent presentation. Particularly want to thank Wells Fargo. You mentioned the loan volume for a year ago, and the fact that your loan officers represent, Latino loan officers represent 12% of your workforce.
12.7.
Corresponding with that figure is the fact that you accounted for about 25% of loan originations to Hispanics a year ago. So we're looking forward to that figure this year. My question, and Urban Institute has done a lot of work on loan denials. A report came out about a week ago showing that not only are minorities, mainly blacks and Latinos, being discriminated manually, but now through automatic, because there is a bias inherent in the algorithms that shows that because minorities don't do enough shopping, they lose out. Can you address that?
I'm happy to jump in there. We spent a lot of time analyzing sort of what product choices people are making and whether or not they're making the optimal product choice, and sort of trying to track back where that's coming from. I mean, we see a lot of people going to FHA loans simply because they're looked at and they just automatically assume you should be getting an FHA loan. A lot of what we've been trying to do is just increase the level of education that we're doing up front to make it very clear that products like Home Possible or Home Ready from the GSEs are a lot of times the right product, and they're way better for the consumer. The challenge is it strikes us less as an algorithm problem and more as a process problem. It starts very early. People are sort of being steered into different products. So we're trying to educate at all points in the process to make sure that those product decisions are the right one for the consumer. I'd like to find some way actually to try to automate that further up, right? So that way you can ensure that the right execution choice is being made, rather than leave it at the discretion of people who might be making a subjective decision.
Yeah, I agree. And I think it's back to the question earlier about outreach, educating the consumer, educating the industry. I don't have the numbers in my head, unfortunately, but Freddie Mac has published some statistics, and we know that if you go to at least three different lenders before making your mortgage selection, you tend to save something around, I think, $3,000 to $5,000 over the life of the loan. If you go up to at least 5, that number doubles to something closer to $8,000. So it's extremely important to shop and find the best selection. And Jonathan, and of course there are automations as well that maybe depending upon your ability or willingness to engage with technology versus individuals. There are sites such as Bankrate and LendingTree and other solutions out there where consumers can get multiple offers. So I would just, as anybody in the room who influences consumers, whether it's your customer or your brother, please promote the opportunity to go through all the options.
And we had one other quick thing, because we talked a little bit about housing counseling, financial literacy, education, and those things are all really important, so don't take what I'm going to say the wrong way, which is just those terms are so boring to me, and they're just not fun.
Yeah, good point.
And so it's very, very rare that, and correct me if I'm wrong, at Wells Fargo, it's very rare we see consumers get into the process having already gotten education, right? It's because nobody says, I want to go take a 6-hour education course before I buy a home. And so we've been trying to think about how we take it and make it a lot sexier, make it a mobile app, make it something that consumers want to engage with early in the process, where they don't feel like they're illiterate and need financial literacy, right?
Yeah.
And so, I put the call out to everybody in this room to think about, how is it that we make this really important thing, knowledge before you get into the process, accessible, easy, and attractive to consumers? So,
The one thing I'd add too, I think it's a great question. It's good to see you. I think we spend a lot of time in the industry thinking about why do we deny people, right? And I think increasingly the question at Wells Fargo is how do we approve people, right? Because when you think about why do we deny people, you're talking about people who are in the process already today, you're talking about the existing process. You're starting with that framework and you're tweaking it, right? When you think about, let me start with a clean slate, right? And let me think about, who's out there? How do I approve them? And I think that lets us think very differently about the process as well. And I come back to the comment I made earlier, like how do we get a national policy around this? I think it's really about sort of stepping back and saying, who are the consumers out there and how do we approve them, rather than why are we denying them? That's right.
Other questions? Yes, Julia.
Well, thank you for this.
And microphone's right behind you.
Thank you to everyone on this panel. It's a fantastic panel. And Jonathan, particularly, thank you for the focus on the renovation lending. My question is about, we encounter many folks out in the field whose problem is not so much denials as just not even approaching the home ownership process. And one of those reasons is in many areas, particularly urban and rural areas, they're not well served by the industry at all, whether it's realtors or lenders, because their loans tend to be smaller balance loans, and because many mortgage lenders now are not subject to Community Reinvestment Act requirements, and so have no organizational need to go into certain areas. And I want to know how you all are addressing the needs of those populations and just getting the industry to serve at a point where, virtually from origination through servicing, almost all the compensation in the industry is done on a percentage basis.
I'll start, and I'm sure everyone on the panel has thoughts, Julie. Thanks for that question. It's a really, really good question, an important one. The cost of originating a loan, as we all know, has gone up tremendously in the last 10 years, right? Tremendously. It's $8,000 to originate a loan. You look at the cost of things like title insurance, appraisals, all of those things when you're buying a $1 million home in Washington, D.C., it seems small. When you're buying an $80,000 home, it seems much, much bigger, right? So my honest opinion on this is technology's got to be the thing that revolutionizes that. We have to make it quicker and easier and cheaper to originate loans to drive those costs down, to make it easier to get people in the process. So I'll just kick things off by saying, the growth and the adoption of technology like LoanBeam, like other things, Wells is doing a lot of great things. I think that's going to lessen the cost of originating a loan, which means it's not going to be unprofitable to originate those loans, right? Because the industry is not, right now with tight margins and low volumes, there's just not a lot of margin to go spend on loans that ultimately don't make money. So how do you make them make money? You just make it cheaper, you cut the cost to originate the loans. And that's my view on that point.
Yeah, and I think it's Jonathan's absolutely right. I think the cost of originating loans, is an incredible contributing factor here as well. But I think it's also important, for us to see it's not just about getting that person into the home, but keeping that person in the home as well, and making it sustainable. And I think there are servicing costs which have really sort of dramatically sort of exploded as well, particularly in the default servicing side. And addressing that as well, I think helps us address some of the segments that you're pointing to as well, Julia.
And I mean, from a consumer perspective, just really highlighting the technology element that Jonathan talked about. Hispanics are more ready adopters of technology, of use of social, mobile. Most Hispanics more so than non-Hispanic households, access the internet through their mobile device. And so the degree to which our industry can really meet them where they are and how they consume information, we still fax things. That's absurd. They don't have a computer in their home. They don't have a fax machine, I promise you. And so if we can just revolutionize how we deal with consumers, we can cut cost out of the process and actually open up access to more borrowers, the people who are ready, willing, and able right now.
Last question over here.
Thank you. I'm going back to the beginning of the panel when you mentioned something that is actually happening with the development being so expensive to build a property that right now the way to go is going into manufactured buildings. In commercial real estate right now we can see a warehouse that can be put on up in 3 months and is really cost effective. But at the other end, my question is, most of the workforce in development and building and home construction is in a large percentage Hispanic. And once we go back, looks to me to the robotics and trying to use technology to build those manufactured buildings, how we are going to take care of those Hispanic workforces that are going to get basically out of job, which will diminish their wealth. So is there any way to actually address the fact that the Hispanic people are going to lose their jobs? And this is back to the beginning of the century during the industrialized era.
Of course.
Yeah.
I'm happy to jump in.
Yeah, please.
I think while 3D printed homes and using Lego bricks and other innovations are really interesting, and I think that they can help us to think differently about how to disrupt construction to make more homes. Right now it represents about 4% of construction. So we're not talking about a wave of 3D printed homes that are going to take place, and they tend to be much smaller in size, which aren't necessarily going to meet the needs of every consumer base. So I don't foresee stick-built homes going away, unless for some reason we can't get lumber from Canada at all. What I do think, though, and to your point about workforce and training, is that when you have a place that manufactures product in one place, it doesn't diminish the need for workforce. It changes the need for your workforce, and it streamlines them coming into one single place. And so they have more consistent schedules, perhaps. There's a single location where they coalesce, and you pull from different places. And so what that can do, for example, is it can create a huge job boom in a location where there might not otherwise be a lot of jobs available, which could potentially be Hispanics taking those jobs, since Hispanics are the largest part of our labor force right now.
Yeah, I completely echo that
Labor
comment.
force growth.
And one thing I will say is that it's 4% of the market today, and the reason is because as an industry we just haven't adopted it. But the jobs, and by the way, when I talk to these manufacturers, they've got 3-year backlogs. They're not building capacity because the industry hasn't switched over. But those jobs are great jobs. They're high paying. They have benefits and all those things associated with it. Where the stick builders, they are trying to cut every inch of cost out. So those jobs are they're not great ways to build wealth. And so I totally agree with you that we have to be thoughtful about this, like any automation, any solution like that. But we have to be thoughtful about creating good, high paying jobs that people really want and can live off of. And I think there's a possibility that we start seeing that 4% become 40 and meaningfully create real jobs.
That'd be great.
Well, with that, I got the wrap-up signed. This panel went awfully quickly. I'd like to thank my tremendous panelists. Thank you very much. And with that, we're going to take about a quick break, about a 5 to 7 minute break, and then we're back for the second panel. Thank you all very much.
Uh-huh.
On topic 2, you're going to me first, but have you changed some...
Good. Hello? If we can have everybody take a seat, please. We're about to get started. I'll say it again in a second. Does anybody have a pen?
You got?
Thank you. I'm glad they did the break. I was worried we were just gonna like hop back on here and go.
I think that's the case for the next panel.
Yeah.
So they're just going to have to.
I think they'll extend it a little bit, hopefully. If we can have everybody please take a seat. We'll get started in about 1 minute. Well, thank you everybody for joining us once again. Our next piece of the program will be focused on savings and investments. So we have a very distinguished panel that we're very excited to have a conversation with. We have Lisa Dedling from the Federal Reserve. We have Gary Matola from FINRA. We have Stephanie Roman from Unidos US. We have Abigail Zapote from Hispanics for Latinos for Secure Retirement. Apologies. So why don't we get started on this conversation? So we talked a little bit about the role that homeownership and equity building has on building wealth within the Latino community. But another important component is balance sheets. So everything about what goes in, what goes out of our balance sheets, everything from debt to credit to expenditures to investments. So all of our panelists today have produced in their respective capacities independent research. So we're very excited to talk a little bit more about data today. So with that said, Lisa, can you start by giving us an overview based on the findings from the Federal Reserve Survey of Consumer Finances on what is the status of Latinos and savings and investments?
Sure. So I'm going to refer to some exhibits. Before I get started, I'm obligated to say these are my views and not the Federal Reserve Board's. The Survey of Consumer Finances lets us construct a really broad measure of net worth that includes things like housing, businesses, financial assets, vehicles, less whatever secured and unsecured debts those families have. So what you can see on this exhibit is median family net worth separated by Hispanic and Latino families and non-Hispanic families. And so what you can see is that Hispanic or Latino families have about $20,000 in net worth for the typical family, whereas non-Hispanic families have a little over $100,000. So this is a pretty sizable gap. When we dig into sort of what are the differences between the two types of families, we can look separately at assets and liabilities. So there's a lot on this screen, but I'll highlight a couple of what I think are notable differences. So first of all, when we look at liabilities, which are on the right side of the screen, you can see here this shows the share of families that have a particular type of liability. What you can see is that Hispanic and non-Hispanic families are actually pretty similar in terms of the types of debts that they tend to have. When we look at the asset side, that's where we start to see some differences. So when we look at non-financial assets, earlier we talked about housing. We can see that there is a pretty sizable homeownership gap. The vehicle gap is relatively small, and there's somewhat of a business ownership gap that I think maybe we'll probably be talking about later. But I'm going to focus a little bit on financial assets since we're in the saving and investment panel. And what you can see here is that when it comes to ownership of financial assets, Hispanic families are considerably less likely to own those financial assets than non-Hispanic families. So only about a little over 25% of Hispanic families have a retirement account, compared to over half of non-Hispanic families, and only about 6% of Hispanic families own any kind of direct ownership of stocks, bonds, or mutual funds. And when we look at how much these families tend to own, so this is conditional on owning a particular type of asset. Are there gaps in investment amounts? We can see there's pretty big gaps too. So when we look at retirement accounts, we can see that the typical Hispanic family that owns a retirement account has about $20,000 in that account, compared to about over $60,000 for a non-Hispanic family. And when we look at investment in financial markets, so stock, bond, or mutual fund ownership, there's an even larger gap. So the typical Hispanic family that owns this type of asset has about $10,000 saved, compared to about $60,000 for a non-Hispanic family. So hopefully in the rest of the panel, we can sort of dig into sort of what might be the reasons for these gaps in savings and investment across different types of families.
Fascinating. Well, thank you, Lisa. Let's go into FINRA's work around financial literacy. So we talked about some of the overall data. What are consumers' perceptions about their own financial literacy? I know you've done some work about that.
Yeah, thanks. And let me first say that it's really nice to be here today to talk about these important issues. So I'm going to put up a slide momentarily that is going to show the financial literacy by race. But and some of you have the data already. But let me just set this up. There are a number of ways you can measure financial literacy. Probably the most common way is a group of 5 questions that were designed by researchers from George Washington University and Wharton Business School. These 5 questions basically hit on interest rates, inflation, investment risk, mortgages, and then bond investing, the relationship between bonds and interest rates. So we administer these 5 questions to basically a large sample of Americans, about 26,000 Americans. It's called the FINRA Investor Education Foundation National Financial Capability Study. And this data is free, and all the reports are free. But anyway, so we administer these 5 questions, and then we basically classify someone as high financial literacy if they could answer 4 or 5 questions correctly. And if they answer 3 or fewer correctly, we label them low financial literacy. Of course, they don't know this. This is what us researchers do behind the scenes.
I wonder how we would fare.
Actually, you can take the quiz at usfinancialcapability.org. But in any event, so when we classify people into high financial capability and high financial literacy and low financial literacy by race, this is essentially what we see. Among whites, 43% are classified as high financial literacy. African Americans, it's 38%. Native Americans, 27%. Hispanics, 27%, and then. Actually, African Americans is 20%.
Asian Americans were 38.
I'm sorry. Yeah, the eyes are going these days. So essentially, what we see is a pretty significant. We see basically Native Americans, Hispanics, and African Americans trailing Asian Americans and whites in terms of financial literacy. So the obvious question is, why is this important? It's important because financial literacy is related to a number of financial behaviors. And the other big question is, why does the gap exist? Well, a lot of it's driven by income and education. But even after we control for income and education, the gap that's this big before goes down to this big. So there's still a gap that we can't explain. And I'd love to hear if people have ideas about why this financial literacy gap exists. But that's essentially the setting, if you will, in terms of financial literacy.
Thank you. And Stephanie, I know that Unidos has done a 10-year look back about how Latinos have fared since the Great Recession. Can you tell us a little bit about the research that you've done on that?
Yes, of course. So we have a forthcoming report that we're finalizing, and it's a decade analysis. So how have Latinos fared since the recession? So it looks at 2007 and the decade between 2007 and 2017, along a pretty wide variety of economic indicators. And what we see is a a sort of mixed picture, really. And I just want to emphasize really quickly that comparing where Latinos were in 2017 to 2007 is important. It was an important benchmark, but even in 2007, which was a sort of an era of kind of broad-based prosperity, Latinos were still behind, and they are still behind now, and so these long-standing inequities persist. So I just kind of want to caveat that. Some of our findings is that along income, Latinos are doing better now than they were in 2007, so they've surpassed those measures. So income is up, poverty is down. However, where we see the issues persisting, where Latinos have not yet reached their 2007 benchmark, is wealth and assets. And the slide I have here is median family assets in 2007 and 2016. And so really this is a problem because Latino assets and wealth were really closely tied to homeownership. And so as the housing market crashed, so too did Latino wealth. And we're seeing that Latinos haven't recovered from that economic crash. And throughout the course of this decade, Latino assets declined by 50%, and Latino wealth now is still about $4,000 shy of just hitting that 2007 benchmark. And so another part of this equation is where debt has increased for Latinos over this decade. And while overall debt has sort of stayed the same, one interesting piece that has increased is educational debt. So this is in line with broader sort of trends in the US about educational debt. Americans now hold about $1.5 trillion in student debt, so it is a crisis, but for Latinos, Latinos are graduating now and entering to college at the sort of largest rates that we've ever seen, which is obviously a huge positive, but the impacts that this has on Latino household finances and Latino economic security, this is sort of the tip of the iceberg of what we're seeing in the last decade. Latinos are now acquiring more economic debt. And I can go into later what this means in terms of Latinos' default rates, which are higher than some of their peers. And so I just want to conclude by saying that this report, one of our overarching findings is that policy matters. Wealth building doesn't just happen as a result of sort of working hard. Policy investments can hurt or hinder a community's ability to build and sustain wealth. And so I can also get into some of those examples a little bit later on.
Thank you, Stephanie. And Abigail, U.S. Hispanic millennials represent 24 million of the population, almost half of the total U.S. Hispanic population. So that's 21% of U.S. millennials are Latino. So what can you tell us about millennials and their overall attitude towards financial goal setting?
Sure. So one of the things that I do want to state from the get-go is that Latino millennials across the country are very young. We have a median age of 27, which means that Latino millennials look like me. The great part about that is that we do have a long ways to go to build wealth. But unfortunately, like some of the things that my colleagues said, we have had some setbacks. Two of the major components of being middle-class Americans means getting a college education and attaining and getting a home. Unfortunately, because of the 2008 Great Recession, we lost our homes, and now that college is becoming a lot more expensive. Even though we have that college education, we are in a very, very deep hole in debt. Back when our parents, if our Latino parents went to college and graduated in the late 90s, they were graduating with $13,000 in debt just for their bachelor's. Today, Latinos or millennials in general are graduating with up to $35K for their bachelor's and even more for graduate and postdoctoral studies, or doctoral and postdoctoral studies. So there is that huge, huge gap that we are going to have to climb and climb and climb our way out of. But we do have to have a lot of policy intervention to make that happen. One of the things that we do know is that 66% of millennials aren't saving anything for retirement. And Latinos fare a whole lot worse. 83% of Latinos are not saving anything for retirement. I will go further into what I think will be some good measures to make sure that those numbers do decrease and we have more Latinos being prepared, not only for savings, but prepared for their retirement as well. But another thing that I did want to talk about is the stance that we have as immigrants in this country. What we've seen is that a lot of Latino millennials, if they are documented, once they are able to get an education, they are able to kind of smooth their way into the middle class because they have that knowledge to be able to, or not the knowledge, but the capability to be able to get high-paying jobs and to not have their documented status come into play during any of that time. Unfortunately, right now, we have a huge, huge crisis with the dreamers in this country. As a former undocumented person and as a dreamer, there are so many things that are happening in this country right now where savings isn't one of the things that are a priority. Because instead of savings, putting money in a savings account or putting money in a retirement account, you have to think about how to pay for your immigration papers, how to continue to be how to continue to keep that status, and not only that, but how to make sure that you have enough money so that if you do end up losing your job because there's an immigration delay of your paperwork, you have to keep yourself afloat, and not only yourself afloat, but usually dreamers are part of mixed status families, and therefore they also have to give money, are the primary breadwinners for their families as well. And so until we come to a close on the immigration standpoint, we really need to make sure that we have different policies and that financial institutions also understand the predicaments that these young people and Latinos in general that may be facing these issues. There are some banking institutions that do have online, or their representatives know how to deal with a DACA recipient, how to deal with someone that is wanting to own a home, or how to, even be able to invest. If at some point they lose their status, does that mean that they are going to lose their retirement benefits? Does that mean that they can take that money home if they're, for whatever reason, may end up getting deported? Those are the questions that we still have to face, that financial institutions need to keep at the forefront, because again, as we mentioned, Latino millennials, or Latinos in general, will be a third of the workforce by 2030. So how do we ensure that institutions, the government, and then just ourselves as allies know how to deal with these situations and know how to keep a driving foot forward for this community?
Thank you. So what I'm hearing is that, we talk about financial literacy or savings and investments balance sheets. We can break down the topics into spending and debt, into savings and investments, particularly non-real estate investments. So why don't we go a little deeper into some of these topics and then talk about maybe some of the policy implications around those issues. So when it comes to high cost debt, such as credit cards and small dollar high cost debt, Stephanie, can you tell us a little bit about what Unidos has done, or what your thoughts are about debt in general?
Sure. So I will give a sort of overview of where Latinos are and some of the most recent data around this. So I just want to establish that historically, Latinos have faced challenges in accessing safe and affordable financial products and services, and this means that there have been fewer opportunities for Latinos to build strong credit profiles. So this is an issue that continues now, and the most recent data from the FDIC unbanked and underbanked survey show that while there are some encouraging data trends, that the number of unbanked Latinos, and those are people who do not have a relationship with a banking institution have been continuously declining over the last couple of years. The number is still too high. In 2009, 21% of Latino households were unbanked. In 2017, 17% of Latino households were unbanked. This is a rate 6 times as much as the rate of white unbanked households. So this really has a lot of implications for the types of financial products and services that people might seek when they are in need of these services, which is where the alternative financial services come in, which can be predatory and really detrimental to long-term credit building. So based on the FINRA data in 2017, 8.2% of Latino households had utilized an alternative financial service within the last 12 months. This includes things like check cashers, payday lenders, and auto title loans. This is compared to about 5.6% of white households. So really just wanting to emphasize here that in the absence of access to safe and affordable products, Latinos and other low-income communities of colors will sort of have no option but to be steered towards these often predatory alternative financial services. And this has implications for their economic security in the short term and their sort of credit profiles in the long term.
And Stephanie, I'm going to come back to you real quick so we can discuss more of the policy implications about those issues. But real quick, Gary, what are the overall attitudes of Latinos when it comes to high-cost debt, and how are Latinos faring compared to other demographics?
Yeah, a couple of thoughts there. First, we ask everybody who takes the survey, we give them a statement, and the statement is, I have too much debt. And you could agree, strongly disagree on a scale to strongly agree on a scale. And what we find is that Hispanics pretty much are on par with the other races in terms of feeling that they have too much debt. And just to give you some numbers, so 41% of Hispanics feel like they have too much debt. That compares to 39% of whites. Asian Americans and African Americans pretty much fall in line. So in terms of perceptions of debt, it's about the same. But the reality is quite different when you look at behavior, particularly around alternative financial services. So for example, take pawn shops. I'll use white as the reference race here. 13% of white, but this data looks back over 5 years. So we said, have you used a pawn shop in the last 5 years? 13% of whites have used a pawn shop in the last 5 years. It's double for Hispanics, 23%. Another one would be payday loans. 9% of whites have used payday loans, nearly double for Hispanics at 18%. We see the same pattern for auto title loans, double whites in terms of usage. We see the same pattern for rent-to-own stores, nearly double whites in terms of usage. So one other point I'll make on this before passing it back to you is we recently gave the National Financial Capabilities Study to 1,000 Hispanics who said that Spanish was their only language or their primary language. And we haven't released the data yet. I just started analyzing, but one thing that jumped out immediately was among the Spanish-speaking segment, the numbers are significantly higher than among the Hispanics who cite English as their primary language. So there's also something going on there that we need to kind of peel back the onion on.
Yeah. And so what do we do? What are the policy implications for some of these high usages of some of these products?
Sure, so I'll hit on 2 of those. One of them is reinstating funding to the CDFI fund. And so this would really support affordable consumer and small business lending at the sort of local community level in urban and rural communities. This funding has stopped, and so this is one sort of policy issue. Another is, importantly in these times, to preserve and strengthen the mission of the CFPB to protect consumers. So those are just 2 kind of broad level.
Tell her to say that, I promise. So much love. Well, thank you. And also on that, you mentioned student loan borrowing also has increased over recent years. And what are some of the consumer protections around that?
Yes, so as I mentioned before, the amount of debt that Latino households now own in terms of student debt has been increasing over the last decade, and I really think this is a turning point for Latino households. I think this is the tip of the iceberg given where trends are going and how many Latino students are enrolling into post-secondary education. And based on the data that already exists, it's frankly kind of frightening the impact that it might have on Latino financial well-being and credit profiles going forward, because even though Latinos tend to borrow smaller dollar amounts than their counterparts, and particularly their white counterparts, they tend to default at significantly higher rates. And so defaulting obviously has some serious implications for a person's financial well-being and their credit. There also, a recent survey said that 41% of Latinos with student loans had been late on at least one payment over the last 12 months. Mm-hmm. So really, there is a student loan servicing crisis that's happening, and Latinos are experiencing these very serious effects of even though they're borrowing lower amounts, and some of these loans are $3,000, $5,000, we can see that they're having, they're sort of can really jeopardize and be ruinous in terms of the overall financial security of these loans, have changing or high interests, and particularly if they're private student loans that are not issued by the U.S. Department of Education. And so this is an area of growing concern, and especially because now 1 out of every 5 Latino households own some kind of student debt, and we only foresee this number to keep increasing.
And so it's hard to save when there's debt, but it is important to talk about how Latinos are doing when it comes to overall saving for the future, saving for an emergency. Lisa, what does the survey on consumer finances tell us about Latinos and savings?
There's sort of 2 pieces of savings. So one is sort of building up a buffer for emergencies, and one would be sort of long-term savings. Mm-hmm. And so we've recently done some research on that first part, saving for emergencies. So families wouldn't have to do something like take out a payday loan for a small unexpected expense or a short-term disruption in income. So what we've done is to think about sort of some rules of thumb that financial planners often give, which is something like you should have maybe 3 months of your own expenses. So what we did in the data is we compared families' liquid savings, so things like cash, money in checking and savings accounts, or any investments they could liquidate without a penalty, so directly held stocks, bonds, or mutual funds, mm-hmm. and how that compares to their own expenses, so their own mortgage or rent, spending on food, spending on utilities, car payments, etc. And so when we look across groups, it's pretty alarming. So when we look at whether a family has at least 3 months of their own living expenses, we find that 42% of non-Hispanic families have 3 months saved, but only 15% of Hispanic or Latino families have at least 3 months of their own living expenses in these easily accessible accounts. And so I think this might explain why we see such high rates of sort of alternative credit use, because families simply don't have the money there for a short-term expense.
And all the disasters that we've had and natural disasters we've had in the past few years in Puerto Rico and Florida and Texas, your data indicates that Hispanics have the least amount of liquid savings in case of natural disasters. So why do you think that is?
I think there's a lot of reasons. It's not totally.
That's for a discussion.
Yeah.
The eternal why.
Yeah.
And Abigail, what can you tell me about how Latinos save for the future? So particularly for retirement.
Sure. Well, I'll begin by saying, so part of the research that we did this past year was we targeted 10 cities across the country that had high Latino rates. And within these cities, we were working with local grassroots organizations where we did a lot of literally just how to create a balance sheet. And we gave these groups an example of what is really just figuring out where your money is going, because I think that even, I think maybe some people in this room still don't know where some of their money is going, right? What money is coming in, where it's going, how much money can be saved, and how much money can really actually be saved and put in a savings vehicle, right? What we found out during this time is that actually younger folks were a little bit more receptive, and younger families were more receptive to using the balance sheet. We followed them through a 3-month period. And what we did see is that if we had younger kids, because we did invite the whole family, because as we've seen and as we've talked about with what in this panel and the panel previous, is that Latino families are living in multi-generational homes, right? So a lot of the financial decisions that are being made as a group. And we saw that if the younger kids were actually able to partake more into the discussions with the family was overall going to do a little bit better, because the parent saw their responsibility to ensure that their child knew and understood what these concepts meant, and therefore they were also taking it into practice themselves. Unfortunately, when it does come to Latino families, a lot of Latino families also aren't making livable wages. And so, yes, we can urge folks to save, but if they don't have enough money to save, what are we really going to do, right? But within part of the workshop that we did was also encouraging these families to really see how much it costs, like what their monthly expenses were. Because we saw that some families, once they saw what their balance sheet actually looked like, went back to their employers and asked for a raise. Whether that was a significant raise or not, it still meant that they finally took it upon themselves to be those self-advocates to say, when I first came into this job, I wasn't asking for enough money, or once I had a child, I didn't ask for more money or more of a raise to take on those additional expenses. And I think that that's something that as a community, innately, we are very humble, and we think that we have these opportunities that are given to us, and so we should just be thankful instead of asking for more. But I think that's a big part of what we should be doing as everybody in this room, is to encourage our families and our communities to ask for more, because the quality of work that we do, the work ethic that we have, is worth a whole lot more. So as far as actual savings, it's without that piece, most folks are just using the money that they have on immediate financial needs, right? Paying off debt, building credit, and trying to get access to loans. And so it really is a work in progress that we have to do to really ensure that our community is taking that action and that step to save. Because fortunately, we were able to follow them for 3 months, but within other organizations or even financial institutions, they just try to, as soon as a person walks into the door, they're asking for a loan, they're asking for a savings account, they're asking for something, but they don't follow them across time to see if they're doing well or not, or even using those services or savings vehicles to their maximum potential, because they just received a customer, cool, they just checked off that box. But are we really doing enough to ensure that these families and these people are really using these savings vehicles to their maximum potential?
And so what I'm hearing is it's a lot of financial literacy that's needed. Yeah. You know, we at the Hispanic Wealth Project, we've created NARP 10, which are 10 principles that we've passed around that really stresses on the need to save for a rainy day, save for the future. But what are some of the other policy solutions to increasing the levels, and this is an open question to the panel, to increasing the level of savings of Latinos around the country?
So I'll start with that. And just to hit on your last point, when looking at retirement for Latinos, the outlook is a little gloom and doom, but I do want to emphasize that there are some positive things to pull out of the latest research on Latinos in retirement. Unidos US, we recently partnered with the National Institute on Retirement Security on a report. And one of our, I think, most significant findings is that when Latinos have access to an employer-sponsored retirement plan and they are eligible to participate in that plan, they participate at higher rates than anyone else, than all other racial or ethnic groups. And I think this is so encouraging because Latinos are facing such huge hurdles to entry in terms of access. But we know that the myth that Latinos don't save is a myth. And when Latinos have access, they are saving. So I think that's an important thing to emphasize. And in terms of policy, I think job quality is certainly a huge sort of factor in that, but also sort of large-scale policy investments can either help or hinder savings. And so one recent example of a sort of targeted policy decision that has not helped Latinos is the Tax Cuts and Jobs Act. And so this was really benefiting the wealthiest 1%. And so the wealthiest 1% of Americans on average will see a $55,000 tax cut, while 90% of Latinos will see about a $300 tax cut. And so when we're talking about wealth, asset building, savings, again, policy really matters. There are ways that we can use policy instruments that are better targeted at low-income folks and middle-class Americans, and some other types of tax credits can achieve this in a better way. So this isn't just about sort of a work ethic and Latinos aren't saving enough. We're not creating the policy vehicles that really allow Latinos to create the wealth that we would like to see.
Thank you. And before we get into Q&A, I want to also stress a very important topic, which is non-real estate investments. We talked about, Gary at the beginning talked about a lot of why Latinos lost the majority of their wealth during the recession is that all assets were concentrated in real estate investments, and how do we diversify some of these assets? So Abigail, I know with Latinos for Secure Retirement, you guys have done a lot of work on 401ks and increasing the amount of Latinos that are investing in 401ks. Give us, paint a picture of where the Latino community stands when it comes to some of these investment products.
Sure. So one of the things that we do have to keep in mind is that currently right now, it's looking pretty dismal, right? But that's not to say that it can't change. So right now, 4 out of 5 Latino households between the ages of 25 to 64 only have $10,000 in retirement savings, compared to 1 out of 2 from white households. And so what we're really looking at right now is that what Latinos really see as a setback as well is that there's eligibility requirements when it comes to accessing these from their such as working a certain amount of hours through their employer, or having a minimum tenure within their job, whether that's 3 months or whether that's up to a year. And these are some of the reasons why they're not participating in some of these retirement plans. But again, if they are accessible, they will use them. But one of the things that we do also have to keep into or take into account as well is that even though Latinos, and especially younger Latinos that do have access to those retirement plans, are using them, but once they do have a financial setback, they don't understand the consequences of what it means when they take that money out. And they're getting taxed double, but no one really explains that to the community, right? And that's up to you. But as we mentioned earlier, even for fluent English speakers, the language and the verbiage is very, very confusing. And so there are a lot of opportunities, and there are a lot of ways that we can give access to Latinos. One of them being technology. We have our phones at our disposal at all times, and there are some really great apps that are helping make this easier. And then there's a couple of apps that are actually also targeting Latinos in specifically. There's FinHabits, and I believe it's there's another one. But the really cool thing that I thought was great about FinHabits is that they learned to really talk to the Latino in general. So when they explain these different terms to the Latino, but they're explaining it to terms where they understand. So when they're talking about diversifying funds, what does that really mean? One of the things that they put on there, it's like thinking about getting multiple tacos. That's always a good thing, right? So putting it into their own terms really makes it a whole lot easier for our community to understand. But again, we just need to have these savings vehicles accessible so that our community doesn't turn to different ways to access money. One of them being tandas, which is, is a form of gaining money. As an example, my mom, she was able to make $20,000 in a year because she was able to get in a tanda with 20 people.
Is that the same
of her
thing as
community.
cundinas?
Yes.
Lending circles.
Lending circles, yes. Thank you. Thank you.
The more proper term.
Thank you. Yes. And so really these are people that they trust in their communities. They speak their same languages. If the folks don't come around and give them money, they're basically shunned from the community, which is almost even worse than being shunned by a financial institution, because who is the face of the financial institution? You don't know, right? And so this is something that we almost have to see as an example to really communicate with the community, because if it's something they know, they'll use.
So in order to save, you have to get rid of debt. And in order to save enough to invest in stocks and mutual funds and bonds, we one of the things that we are also trying to educate our membership is that it's not just for millionaires. You can invest in the stock market in smaller amounts and build it over a lifetime. So Lisa, can you tell us about Latinos and investments in non-real estate assets such as bonds, stocks, and mutual funds?
Yeah, so there's two ways families can invest and participate in financial markets. One is through retirement accounts. That's the main way that most families participate. And in fact, 77% of Hispanic families only participate via a retirement account. That means retirement account access is really important. And in our data, we see that for families who are working, 34% of Hispanic or Latino families have access to a plan at work that they're eligible for, compared to 50% of non-Hispanic families. So that's a really big gap. And I think that alone would increase, change, if families have some way to access a plan through some sort of government option outside of an employer option, maybe that would really increase investment. Direct investment, is another way families can participate. If, for example, they don't have access to a plan at work, they could either get an individual retirement account, an IRA, and invest that way, or just directly buy stocks, bonds, and mutual funds. But we see in our data that Hispanic or Latino families are also a lot less likely to choose those options than non-Hispanic families. So I think a lot of increasing savings would be, trying to either sort of come up with a default option the way that people who have access to an employer plan have a default option, for families who, for whatever reason, because they're self-employed, because they work multiple part-time jobs, just aren't eligible for a work plan that would sort of create this default savings option.
And if I can very quickly
and then we'll move on to Q&A, or else they'll kill me over there.
Follow up on that. There are state-based plans that are sort of trying to fill in the gaps of the now defunct MIRA program. So CalSavers in California is an individual portable IRA-based retirement account. So it follows the worker, regardless of whether the employer provides any retirement benefits. So that's one important way, and others are eliminating the part-time restrictions on access to retirement plans for workers. And another more novel approach is allowing employers to contribute tax-free to student debt for their employees, and kind of freeing up some more money to put into either retirement or other investments on behalf of their workers.
Thank you very much. And while we have these panelists up here, I want to open it up and give the opportunity for all of you to ask some questions. We have a microphone over here.
Hi, thank you. It's really an amazing panel. I'm currently a real estate professional. I'm part of NARAB, but I used to be a stockbroker, and I used to actually translate brochures for major Wall Street firms. And generally speaking, those brochures were meant to go to the wealthy in Latin America and not to the Hispanic community in the US. And I don't know, for you at FINRA, I don't know if that falls outside the scope of what you do, but I'm just wondering if FINRA has any kind of outreach like Fannie and Freddie do to try to translate financial information to Latinos.
We do. Finner has a lot of investor resources, and not all of them, but there's a good portion of them have been translated into Spanish. There's more work to be done there, but we are aware of it and are trying to get more and more educational material translated.
Right over here.
Great panel, great event. Thanks for having us. So I'm sitting on the national board with NARP, as a lot of you guys know. This was just a general comment. I think it was the second young lady that mentioned that when Latinos were given the opportunity to have that sort of forced savings, there was a high participation. I'm not sure which one. And that usually came from the employer. But I don't know if, now switching over to the banking industry, if we're the lenders in the room can create some kind of vehicle and introduce Latinos to sort of a forced savings by pulling some kind of sweep account out of their checking. Or I know there was a lender that had, every time you use your debit card, they would round it up to the next dollar, and that change went over to a savings account. So some of that forced savings from the banking industry be introduced to the Latinos could be another way to increase that participation. Thought.
Just a quick response. I think that that is an important factor. I think like forcing Latinos to save for retirement doesn't make sense. It has to happen at the same time as helping Latinos build savings because of the issues with taking money out of a retirement account that can be sort of ruinous and de-incentivizes kind of saving for retirement again. So I think that savings vehicles and retirement savings vehicles have to happen concurrently for that to really work for Latinos, because in our research we've really heard survey research that Latinos, one of their main sort of hesitations with retirement plans is that they feel that's my money, but I can't take it out if I need it, if I have an unexpected emergency. And so there's this kind of unwillingness to say, well, why should I be putting all of this money into this account? So
that kind of works in tiers, right? Where you first establish a liquid savings account,
right,
and then once there's a good chunk there that figure 3 months, and that can be put into retirement.
Right. Exactly. So they need to happen in tandem, I think.
Can I just point out, though, that one of the benefits of an employer-sponsored account is that employers often offer a match, and so that doubles the amount that you contribute. And so any sort of savings option like you're talking about isn't going to, presumably, from a private lender, is probably not going to have that extra benefit.
Absence of an employee participation.
Yeah.
Well, and one other comment about the retirement plans, a lot of them, people are auto-enrolled, and auto-enrollment has done a lot to eliminate the race-based differences in retirement savings.
Opt out instead of opt in.
And auto escalation helps build the savings.
Luis? The second Luis?
Hi, Luis Salcedo, FHFA. Thanks again for the panel. I think this has been really great. So the first panel talked about this really large proportion of new households being Hispanic or Latino. But this panel is talking about a lot of Latinos not having very many savings, if at all. So are a lot of these new Latino households ready to have even low down payment mortgages, or do they need to just keep saving in like simple savings accounts until they're ready to have a rainy day fund, also do a low down payment, and have like some debt service coverage ratio that's reasonable?
Well, I think I would say that the ability is there. I think it really kind of, at least in my opinion, I really think that it just comes to really being financial literate, right? Because we know that Latinos can save money very quickly, but they don't invest money into things that will have interest in the long run, right? Like you'll see a lot of Latinos with a lot of brand new cars, but it's diminishing appreciation, so they just spent $30,000, $40,000 on a car that tomorrow is only worth $28,000, right? And so it does come to that financial education aspect. It's going to take a lot of hard work and effort, but I think it's very possible. And especially teaching at a younger age when we do have this flood of Latino millennials. If we're able to target that generation, I think we'll really be able to create that and build that wealth that we need for the Latino, or to really change Latino dynamics in the U.S. as a whole, within the next 20, 30 years. I think it's definitely possible.
Can I just also point out that we see in our data that Hispanic and Latino families tend to be the most invested in housing, in the sense that they put the largest share of their savings in housing, and that tends to be at the expense of other types of savings. So I think someone mentioned in the first panel that this sort of causes just less diversification because they are the most invested in housing.
Yeah. We have one last question right over here with Joe.
So my name is Joseph Neri. I'm an attorney in Chicago, and one of my practice areas is estate planning. And so one of the things that I've found over the last 5 years is that Latino millennials have been bringing their parents really to focus on their estate planning. Many of the tools which can be used obviously for savings and investments. And so it always seems to me that there needs to be a focus on these younger Latinos because they essentially are the resource for their parents. Do you see any kind of an emphasis, or in any of the programs that you're seeing, training, whether it be educational seminars, is there anything where there's a push towards their children or towards the younger Latinos? Because again, oftentimes they're the ones that bring that resource, bring that information. And Abigail, I think you mentioned something about a parent following their child's recommendation. I just had a client yesterday who's buying a business, and really they're following their college-educated 19-year-olds business advice, right? And then they call me, and so I'm speaking to their college child, and I'm speaking to the parent, and they're saying, okay, well, talk to my daughter, and if she signs off on this, I'll go ahead and do it. But again, it seems to me that's where we need to really make an emphasis. Are you seeing anything like that out there?
Well, one, I would say that's 100% correct, right? Like if it's new parents, usually the child is a translator in the family, right, from a very young age. So they've been trusting this kid for, decades, really, to give them that proper, really just translation of what's going on. But I personally have not seen any programs. We're the ones that are building one of the first programs that we're doing across the country. So if y'all want to help fund us, let me know. Because obviously it is very necessary, right? Because again, you said it perfectly. And just to reiterate, if we're focusing on these young Latino millennials that are the voice for their families, and not only for their families, but politically as well, we're really going to be able to create that political wealth that we've been trying to gain for decades.
And just a quick follow-up there. We recently released a study called Millennials in Investing, and we did find that Hispanic millennials are investing, but they're African Americans and Hispanics are lagging whites in terms of investing in taxable accounts. So, but the gap is closing, and a lot of that's income-driven as well. But there is some research on that.
Well, I want to give a round of applause to our amazing panelists. Thank you so much for joining us. And let this be a continuous conversation between all of our respective organizations. Thank you. And also, there will not be
Armando, I'll just take your lead as to when you want me to interject. I sent you my notes. I'm ready to talk on an array of things, so just...
Okay, and we're going to keep it just lively.
Okay, your mic's live, just so you know.
Good morning. Hello, everybody. Can everybody take their seats and we'll get started with the next panel?
Great.
All right, we've had a tremendous day so far, and we've got the next panel that we're going to kick off now. This is the panel on Hispanic entrepreneurship. I gotta say, I was excited to be a part of this panel because it's a subject that's very close to my heart. I'm an entrepreneur. When I left public service, I wanted to start my own business, and I did. I've got to say, it's thriving and doing very well. And I know that entrepreneurship is a subject that is very close to the heart of NAREP as well. It runs very strong through NAREP's veins. Am I right, Jerry? Amen. Let me just sort of take a poll here. Show of hands, how many of you have started a business or consider yourself entrepreneurs? I think that's over half the room. That's amazing. Come on, give yourself a round of applause for Hispanic entrepreneurship. That's great. You deserve that, right? Because it's not easy. There's serious personal and financial risks that go with trying to start your own business. Gary Costa, he's an all-star entrepreneur. He not only starts businesses, he starts trade associations. He's a co-founder of NAREP, for anyone who isn't familiar with Gary's work. And so we've got a panel here of very esteemed experts who are going to help us dig into this issue about entrepreneurship. We're going to get into some of the challenges associated with it and the solutions that are out there for helping Hispanic entrepreneurs succeed and grow. Let me introduce our panelists. We have Abigail Golden Vasquez, who is the Executive Director of Latinos and Society Program at the Aspen Institute. We have Liz Lopez, the Managing Director of Nexus Consulting, and Leo Pareja, a Hispanic entrepreneur, a very good one, and the CEO of Remind. I should note that we had two other panelists originally on the panel who could not make it, Monica Matia and Alan Gutierrez. They send their regrets. We've got a great panel here for today. Let me note that the bios of our panelists are included in your packets, and like the other panels, we'll leave 10 minutes at the end for question and answers. And for the online audience, you can submit questions for the panel at the end at events@urbanorg.com. So let's start first with the challenges that face Hispanic entrepreneurship. Abigail, your institute put out a report that I thought was very fascinating, and there was two lines in the executive summary that caught my attention. So I'm going to read them to you and ask you to comment about this. It said, the 5-year average growth rate in the number of Latino firms has remained at double or triple that of the national average for the past 15 years. That's great, right? However, even with the rates at which Latino-owned businesses launch, they encounter significant barriers to scaling in size and revenue and fail at rates higher than those of other groups. So please explain this a little more. Tell us about this.
Absolutely. Well, first of all, thank you very much, Armando. I also have to say it's a rare occasion that there are two Latina Abigails consecutively on panels. So the whole time I was like, yes, yes, are you calling my name? But no, it wasn't me. It was Abigail Zapote, who great to follow in your footsteps up here. I also just want to say what a great set of panels, right? Because all of these things are interconnected. Home ownership impacts the ability to get loans. Having financing impacts the ability to, to have your business grow and thrive, or even to be able to start your business. All of these things are interconnected, so kudos to the organizers for the way you have organized this series of panels, and I'm just delighted to be on this and talk about this important topic, which for me is not a topic about Latinos. This is a topic about the future success of America, of the economy of the United States, because what happens to the Latino in this country will determine what happens to the entire economy of the United States. As you pointed out, we're growing businesses at multiples the rate of the rest of the population. Unfortunately, our businesses do face a lot of obstacles. Some of the reasons are lack of access to capital, number one. I'm actually going to put up some of the, the challenges up here. So I didn't come up with all of this stuff. I actually convened a fabulous group of experts who, from across sectors, from government, from philanthropy, entrepreneurs themselves, folks from CDFIs, community serving organizations, to really tackle what I see as an urgent challenge facing our country. How do we get more Latino businesses to grow? Because those businesses provide employment and they contribute to the economy in myriad ways. So this is, I would argue, a national imperative. So we set out to tackle that challenge. And I asked this group, what are the most important challenges that you see out there? And then I asked the group, what are solutions to those challenges? So I think in your packets and then up here you'll see there's two kinds of challenges that we identified. One I'll call business challenges, access to capital, access to procurement or supply chain opportunities, business education and or just general know-how. And then a whole other kind of set of challenges which are what I call, and the group we were talking, that we met with, call the water that we swim in, right? So it's the circumstances in which we find ourselves. And they identified 3 critical challenges there as well. The negative stereotypes or diminishing stereotypes or just undervaluing perceptions of the capacity and the capability of Latino businesses. Was one of the serious challenges that was raised. Lack of power and influence. So we need to build wealth in order to be able to exert influence and power to ensure that we have positive ecosystems to support all the things that we've been talking about in the earlier panels and in business creation and growth and supporting that growth. And then networks and mentoring. Not just lack of access to networks and mentoring, but knowing how to use those to help us build wealth and grow our businesses. So I'm going to stop there.
Liz, let me ask you about, you had some data, some profiles about the Hispanic entrepreneurship, about the demographic. You want to tell us a little bit about that and what your view on these challenges are?
Sure, absolutely. One of the things that we always keep hearing is that, Latinos are great entrepreneurs, and it is absolutely true, but one of the challenges that we really have is scaling those businesses. 1 out of every 4 new businesses is started by Latinos. But unfortunately, only 3% of those businesses are able to scale their growth for over $1 million in revenue, which is truly challenging. And as Abigail mentioned, one of the biggest challenges is really access to capital. But even as businesses begin to grow is how do you create that pipeline? And one of the things that I heard a little bit on that last panel was it could be cultural, it could be due to a number of reasons, but we tend to go to our family and friends when we need money. It's not always going to the banks. I used to be the head of policy for the Opportunity Finance Network, which is a trade association that represents community development financial institutions, also known as CDFIs. And a lot of people in the Latino community still don't know about them and how they're capable of providing both technical and also financial assistance, and really get them up to speed before they can go into mainstream banking. So those have been some of the challenges in terms of, yes, there's a great deal of growth, but really the growth has been hampered by the fact that we have not been able to scale up in terms of growing those businesses. And the challenges, again, it always comes down to access to capital.
And does that put Hispanic businesses in a sort of a quandary of grow or die for many of them, or do they just operate at the initial level that they started at?
Do you want to?
We can, you go and then I'll just chime in as
It's really
needed.
been stable in terms of that 3%, because again, if you don't have access to tools to be able to grow your business, and the main one being in access to capital, that's really what has been the biggest challenge. Is you don't have that initial loan to get you to the next step, or that short-term access to cash to be able to make payroll. And one of the things that I think I'll talk a little bit more about later, but it's how do programs like the New Opportunity Zones can really provide a new opportunity for small businesses to really break down that barrier and be able to scale up their businesses.
I don't have too much more to add on that. I don't know if I wouldn't qualify it as grow or die per se. Certainly you need capital to survive. So a lot of businesses will fail, and that is one of the number one reasons that businesses fail is because they don't have access to capital. But yes, many businesses can stay at a moderate size and continue. In fact, a hugely disproportionate amount of Latino-owned businesses stay small, too small, I would argue, for what we need for our economy. Only 3% or under 3%, I've heard 2 in some studies and 3% in other studies, of Latino-owned businesses are at revenue of more than $1 million. That's just incredibly low. We have to turn that around. So I think we got to start talking about some of the solutions later on in this conversation about how do we turn that around.
So let's talk about capital, and we lucky to have 2 entrepreneurs here, Liz and Leo. Leo, talk to us about how you overcame the barriers about capital, the experience of your business. Tell us a little bit about it.
So the first thing that keeps coming to mind as we're having this whole conversation is it comes down to education. But I think we just fly over the fact that as a cultural group, having our immigrant experience in this country, we're still super young. So not only young in age and median age, but also in who's kind of risen to the top as mentors for us. So I would say, last year I read Steve Case's book, The Third Wave, and he's probably the most famous DC entrepreneur we've had. And he actually it's the first book I ever read that actually defined the difference between what is called a lifestyle business, which is that small business that's pretty much family operated. It gives you about the income of a job, right? You have your own job, but it's your own little business, versus what's considered a growth business, which is actually what drives most of the employment in this country. And I just scaled a business and finally broke into growth. And the crazy thing is you can't access growth capital till you cross typically about $10 million in top line revenue. So that gap between 1 to 10 million, and the experience I had when I actually crossed that was actually encouraging, because that's the purest form of capitalism. So they don't care what you look like if you can hit your numbers and you can grow. But when getting from that 0 to 1 process, there's a whole bunch of access with SBA loans, and educating our population that instead of starting your own little restaurant, buy a franchise, because that's way more financeable, right? That's a lot more scalable. Capital likes certainty, and the asset to underwrite gets diminished from a risk standpoint if you can actually buy a system or a process that's scalable and proven out. So I think it's very important that the education, so I employ about 160 people who are highly educated. It's a tech company, so people have advanced degrees. I taught 2 classes yesterday for an hour each in each one of our offices about credit. These are 26-year-olds, most Caucasian, well-to-do families who didn't understand their own credit score. So I think we have a national problem on finance. I think it should be a required course before you get out of high school. The fact that a 17-year-old can take on $200,000 worth of debt and doesn't understand what their credit score or how it works should be illegal. And I think it's a national tragedy that we have in this country. But I think we should be able to educate folks on whether it's an FHA loan, which then gives you the equity to take out a HELOC to then scale your business. It is a sequential process in the capital continuum, in my opinion. But it's from my standpoint, has been truly fascinating when I got out of the smaller business to a larger business, is once you can break certain hurdles, they actually throw money at you. And I didn't reach out to anybody. All the interest was inbound because I hit those thresholds. And capital is obsessed with return. And if you can scale a business, which Latinos I think are very capable of, it's that 0 to 1 process to be able to jump onto the next level of business.
And so you started the business, it was just an idea in your head, right? What kind of capital did you start with? And was it just sweat equity? Was it your own money? And then where did the outside money come from?
This is my third business I've scaled. So it's unfair to compare because I've been on panels with other folks, and I was able to raise quite a bit of private capital because I've returned and proven returns to the same folks for over a decade. But I actually think most entrepreneurs that don't have a record should start with friends and family, because that's the money you promise to pay back no matter what. Once you have a track record, people will give you non-recourse money, which is the last step, but typically it would be friends and family. Then it would be some type of bank finance, whether it's SBA or a smaller regional bank. But once you actually have a track record, your track record is the part of the underwriting where they'll give you money that's non-recourse, which would be your seed, your angel, your VC, then all the way to growth capital to private equity.
And then there are other types of entrepreneurial forms of business that are more like service companies. My firm is a service company. I didn't need a lot of capital. What was there was what I provided. I mean, Liz, your firm is also a service type consulting company as well, right? You want to tell us about some of your experiences, and then we'll get into some of the solutions?
Sure, and I can actually talk about some of the people that I've represented. So I have the fortunate of having been not only a lawyer but an advocate. I've had the opportunity to both be on the public side and on the private side and on the corporate. And actually to follow up a little bit on what Leo was saying in terms of experiences, what I've actually heard from having represented a lot of clients nationwide and also having been at a trade association that represented CDFIs is that a lot of people went from family to banks, not knowing about SBA, but also not knowing about CDFIs and not knowing about credit unions. So I'm just going to give a quick shout out to the CDFI Fund, which is a program that is sponsored by the Treasury Department that a lot of entrepreneurs don't know about.
I don't know about it, by the way.
See, okay. So I don't know, how many of you know about CDFIs or the CDFI Fund? Okay, this is an unusual room because actually some of you know, but for those of you, I'll give you a quick overview. So there is up to about $250 million just through one program that goes out to CDFIs. But for those CDFIs, they usually leverage up to $12 for every $1 that they receive from the federal government. So that is amazing for those of you who are on the receiving end, who many are small businesses, because not only do they get the financial assistance, but most importantly is that technical assistance. You may be really good at running a restaurant, but you may not be excellent at keeping your tax records, at doing payroll, and really CDFIs are there to provide those type of recourses. And to the point that both Abigail and Leo was saying, the big challenge is, yes, you got your business started, you might have been able to go to your family friends for the money, but the problem continues to be is how do you scale up? Mm-hmm. And in order to scale up, you're gonna have to have access to different types of funding that culturally, and again, yes, we're young, but we've been saying that we're young now for a while, so we're going to get to the point I think we're going to be now middle-aged and getting older as a community, but we need to start accessing as to SBA being popular, but whether it's CDFI fund, whether it's new markets tax credit, and really one that really was just passed in December as part of tax reform is really opportunity zones. And there's a great deal of educating that needs to be done because that provides access up to $6 trillion, and that is with a T, in capital gains. It's a total untapped market. It's brand new, and the Latino community needs to be part of it.
If I could just tag on to what both of you just said. First of all, Leo, you pointed out, I think, what the critical challenge is, and I call it the missing middle. You have a lot of support for microloans and microenterprise and community, support services on one hand, and then you have this other level of equity, bank loans, and there's nothing in the middle, or very little. It's not nothing. And then you brought up, Liz, the CDFIs, and there's community banks, there's credit unions. Those are the ones that are filling in the gap, but we need to move a lot more capital into to that middle, because the demand far exceeds the supply. So that's one of the big challenges just on the capital side. But I would say there's a missing middle in everything. What you both pointed out, and what you need when you start your business is very different than what you might need when you're growing your business and when you're scaling it up. It's a whole new skill set. Where's that middle level of training? Where's that coming from? Very few organizers. One of our partners on this report that we did, Latino Business Action Network at Stanford, is one of the few ones that's doing that just for Latino-owned businesses, and they're also building and creating those networks that are missing for so many people in the middle.
I also want to talk about some of the non-financial challenges, and you talked about some of those, Abigail, in the beginning. How we can, let's address those and talk about possible solutions. One of them you mentioned was access to networks and mentors for Latino small businesses, startups. What are some of the possible ways to address that?
Well, there's such a gap in this area that our group pointed out that first we actually need to even identify what they are and which ones are effective, and also track them for the industries where the majority of Latinos are. So very difficult networks to break into is in the construction industry, where a lot of our businesses actually reside. That's a problem. So what are the most effective networks in that industry, and then how do we break into them? We need to basically come up with a strategy and even a playbook or a plan to get more of us at the table and ensure that those people, once they're at the table, are bringing more of us along into these organizations. But most importantly, figuring out how to actually use those networks effectively. So how many times have you gone into a room and you see all these people, and it's a really important group of people like all of you right here, and I'm sitting over there and I'm like, how do I introduce myself to these people? I don't even know what the ask is, what I want to get from you. So we need a playbook that we can use to tap in and effectively use the ones that even exist.
Interesting. Let me take another poll for the audience. How many of you who have started your own business, how important was networks and mentors to you in your business? It is, right? It's very important. Leo, what about your experience?
Absolutely. Yeah, I think we actually need to be comfortable with, if we can't find it in our own community, to not be scared to go to the gray-haired white guy and ask to teach me how to do it, because in my experience, when you go and ask, they actually are very welcoming. They just, we're still, tribal creatures, and we have affinity to people that look and sound like us. Mm-hmm. But typically when approached, and you still will have the same kind of relationship because you remind them of you at a younger age. And I've gotten phenomenal help from folks that I just made the first reach out, and then they were just as giving as could be. But where I think also is, once you get that call for growth equity or venture capital, it's that network who says, this is how you do a pitch deck. Don't say this, make sure you hit on that. And that's the stuff where I think mentorship is super valuable, because once you get these at-bats, there's a formula that's not taught in school or at home for us, because we're not part of those networks quite yet.
Yeah, and it takes so much individual initiative, right, to go and find those networks and those mentors. Are you aware of any formal structures that people can look to try to find that kind of help? Abigail, or the whole panel, Liz?
Well, I mean, and one sort of obvious one would be, Hispanic Chambers of Commerce, any chambers of commerce, business development organizations. But then, of course, there's some, depending on, your university, your school, those are always really good networks. PPI, the presidential, I'm going to mess up the acronym right now, is one of those very powerful networks for people in business.
Or everyone can just join NAREP. It's an amazing
there you go.
networking organization, right?
There you go.
Just amazing. Let's talk about some of the other non-financial challenges. Business skills training. Any thoughts on that?
I don't want to dominate. You guys go.
I mean,
were you self-taught in what you did?
No. So a lot of times when I speak, everyone says, what would you do differently if you knew what you know now? And I say to all young people, figure out who you think you want to become and go work for them. It shortens their learning curve. It'll teach you one of two things. A, it's like, oh my God, I do not want to do this when I grow up. Or it should shorten what should be 7 years into 2 years or 1 year, because you're learning through osmosis. So I think too many young folks are not okay with delayed gratification, where it's like, I will live on ramen for 2 years, but I will shrink a decade into 2 years. And that's the trade-off where I think, and that's where it's like, step outside of your comfort zone and approach someone that doesn't look like you, and be willing to work for very little in exchange for that mentorship. I can't think of anything more valuable that's worked for me in my whole life.
And have there been any challenges, let me throw this out to the panel, with, you also mentioned, Abigail, addressing stereotypes. This is something that is not always overt, although it's changing a little bit, it seems lately. What about dealing with stereotypes for Hispanic entrepreneurs?
I think it's critical, because we know that Hispanics and African Americans are declined with control for everything else, are declined at much higher rates for requests or access to loans for their businesses. So all things being equal, they're being declined more. So they're either just seen as a higher risk or presumed to be a higher risk. A lot of what our group was talking about is just, the presumption that, and God bless them, love them, that Latinos just do taco trucks or just in construction. Those are all noble and important things to do, and I wish there was a taco truck on every corner. I'd be a happier person. But and I'd love to see some franchises so that our taco truck businesses can grow. But there are all kinds of other businesses, and Leo is an example. We need to see the models shown back to us so that we can aspire to them, but also so that the gatekeepers see the potential that we really have that's right here in this room.
And to add to that point, and this has been an ongoing issue because yes, Latinos and African Americans, and those are just the stats, they get turned down at a higher rate than other communities, but what are the roles of banks in this? Whether it's discrimination or where there are other factors, is there a referral program to refer those individuals that for whatever reason did not qualify? And there's also data on Latino entrepreneurs having like a higher number in terms of their credit scores just not being ready or not having the track record. So again, banks are not the ultimate solution. I mean, they're great in terms of providing that access to capital when you can check the box on a lot of things. But again, it's being creative about identifying what the issues were, but also making and connecting the dots as to, okay, you got turned down. Do you get a list of, what are the nearby credit unions or CDFIs or the SBA programs that you might be eligible for?
So I think one last topic that we wanted to get into before we go to Q&A is the issue about government policy. Alan Gutierrez couldn't make it here. He's an assistant administrator at the SBA, but I still want to try to have a bit of a policy discussion here. There are certainly programs at the Small Business Administration that provide capital. There are programs that provide government contracting assistance to contracting firms with the government. But I'm curious, from your point of view, is the government doing enough to try to help Hispanic entrepreneurs?
I can step on that one. Actually, I talked to Alan last night, and as much as I love the SBA is not the only agency out there. It's incredible in terms of the available capital that exists, whether it's at the Department of Energy, at the Department of Transportation, whether it's at the Department of Commerce, whether it's at the Department of Treasury. And like what Leo and Abigail were saying, there's really what Latino entrepreneurs do, we don't fit into a square box. We do an array of things. So, looking to just one agency is not the way to go, but really looking into the different agencies and the different types of capital that are out there. The government cannot really be a solution to all the issues in terms of access to capital, and that's where really foundations can play a great role. Other mission-driven organizations can also play a great role. And again, it takes an array of stakeholders to really be able to assist Latino businesses be able to scale and to address some of the other issues that we've already discussed.
I think they can have a great and important role, though, and I don't want to diminish that, but they've been working on it for some time, but there's been a real challenge in accessing the SBA loans, and we have it's another example of just under representation in access, and there are challenges, not enough Latino. First of all, let's start with a self-perception challenge, and that is Latinos don't like to take on debt. Number one, it's a scary thing. I can relate to that. And Latinos also are fearful of being rejected, and so they often don't try. And to get an SBA loan, you need to demonstrate 5 years of records, and you need to have all your ducks in a row and have all these papers there. And they either don't have it, or they're afraid that it's not in the ship-shape fashion, and so they sometimes give up. So I think there's also a role for NAREP too, to train them and help them access how do you get your ducks in a row so that you can go do that and get those loans.
Yeah. And I think we should also talk a little bit about how Hispanic businesses can help other Hispanic businesses. As Leo, as you grow and you look at bringing in subcontractors for business-to-business type of contracts, do you look at maybe utilizing Hispanic-owned firms?
So in my previous businesses I did, I would say we're still minority in the new business, but it's mostly South Asian. So it's Indian, it's Chinese, it's South Asian predominantly. Controversial as it may, I'm very careful who I do business with based on how they view the world politically. So I've given back money with people who publicly support certain things. I'm like, great, this Mexican won't help you earn money then. and return their money. So I'm quite open about my views if people are quite open about theirs. So I think we're all making decisions as to how we create and stimulate the economy at every decision point. So I'm very consciously doing that.
Okay. So let me move now to the question and answer period. We have a question up here for microphone.
While we're waiting for the mic, I just want to say one clarification is when I say Hispanics don't, we all know, that's shorthand, that it's a very diverse population with very different sets of circumstances, both on how they arrived and what the level of education is, et cetera, et cetera. So I'm making generalizations based on the statistics, but not on...
I wrote it down.
Yes. Actually, that's what I was actually going to reiterate. I think it's more that we have a responsibility. I think that there's kind of a discrepancy where, once again, the stereotypical, the immigrant, and then there's a room here full of educated, professional Latinos. So it's like we have to close the gap. So I feel that we kind of just have to step up more and help out. I think that's kind of like the rhetoric that we also have to really kind of push to help and be a mentor and just to be a voice, because we all have a platform here, so I think that that's just one thing that we just have to be more responsible about it.
Yeah, thank you. No comment. Let's move to the next question. Well, if there are no more questions, let me just move to conclude the panel's discussion. Thank you to our panelists for their presentations today. And I think we're going to
wrap it up.
Good
afternoon, everyone. Hi, Elena McCargo. I am the co-vice president of the Housing Finance Policy Center here at the Urban Institute. I just want to say thank you, first of all, to NAREP and the Hispanic Wealth Project for their partnership in today's panels. You guys were excellent, and this information and this conversation is one that we intend to continue. So I'd say maybe consider this the first, maybe of more to come. Glad that we had a full house, and again, I know a robust discussion, which I missed some of because I had another event that I was at this morning. But again, just a huge thanks to our partners who made this happen and who collaborated on making this such a rich dialogue today and covering such a great span of things on the agenda. We are going to be focused here at the Urban Institute for its certainly number one priority in 2019. On looking at the issues around Hispanic and Latino and Black homeownership and wealth building, and that's an area of great focus for us. And as I mentioned, just something that we're definitely going to be looking to continue this partnership with, and hopefully expand collaboration on to bring more and more content, research, information, so we can really advance the policy conversations that are happening on these topics. If you, I think we have an audience online as well. Just want to thank you all for tuning in, and just let everybody know as well this will be available. The recording of today's event will be available online in the next day or two, and you can share that with your colleagues that weren't able to make it, or your colleagues who work for the government who have the day off today. So thank you all again for being with us, and that's a wrap. We're gonna wrap up the day, and thanks please to all the panelists and everyone else for being with us.